Welcome traders, it is Sunday the 26th of February 2023. I'm recording this for the Monday commencing the 27th of February. So we're going to finish up February by Tuesday. We're starting March, we're kicking off March for the tail end of the week. And before I go into my usual weekly analysis, I was going to mention something new, which is very unique, first time I've ever done it, and it may well be of interest to you. So let's, how do I explain this? So first of all, the London Trader Show is in London in 2 weeks time. Okay, so it's Friday the 10th of March. I'm going to be there the whole day. For the first time ever, they have created a window especially for me to produce a masterclass. And so it's been called the Pro Trader Elite Series. It is a masterclass, the likes of which I have created content from the ground up. This is stuff that a lot of it I've never seen anywhere before. This is stuff that I have, this is my stuff that I've put down on paper for the very first time. And it's going to be exclusive to this event. So I will put the link to this event in the description. It's going to be on my social media. I'm kind of excited about it. Sorry to only leave it sort of 2 weeks out, but most of us, as you might understand, are relatively busy. What I wanted to show you as well is that a lot of this content that I'm creating, and this is very raw that you're looking at, it's brand new. So I'm kind of busy generating it and trying to take all the things that I know that are unique to me that I've picked up from everybody, from Nick McDonald, Larry Williams, Al Brooks, everything, plus my own stuff that I've never encountered anywhere else, kind of bringing that stuff into this and putting it into the content about for day traders, how to create that routine, reading price action, technical trading. So it's meant to be a very, very unique masterclass. And so this is something that I will be producing. So I'm working on the slide deck now. I need to get it done in the next couple of days. And then this is going to be available exclusively to people who are interested in attending this event. So I thought that if some of you are interested in this, you should get on it. As I said, this is the very first time that I'm going to be producing this content. And it's available to all of you. It's a 4-hour masterclass, but it also includes mentoring sessions. So I'm very excited about it, obviously very excited about it. And I think hopefully it is going to be outstanding. So I just thought I would draw your attention to that. I will provide the link in the description if you're keen on that. And then that being said, let's move on to into this week. What's going on? So thank you for bearing with me. Okay, let's have a look. So it's the tail end of February. It's a shorter month. Obviously, it is the shortest month. And really, there's not a lot of big news out there. It's really just to see how the markets, are they easily spooked? How sensitive are they? So my focus is going to be on the US stuff as well. Consumer confidence, manufacturing and services numbers. And interesting, and it happens, although somebody would say to you that the first Friday of every month is always non-farm payroll, it isn't always the case, and it certainly isn't the case to my knowledge. This Friday is not non-farm payroll, so it is likely to be the next week. But for this week, we have plenty of news coming out, which should create some movement in the markets, especially as those monthly candles want to close. It is interesting to me. I think we can see the dollar is trying to resume the trend that it had last year. It's basically been taking a break from around about October, and now it's had a correction, and now it's looking, just trying to decide which way it's going to go. So let's see what the charts have to say about that. The other thing that I keep meaning to do and not doing is I'm going to just bring up my calculated instruments. So the platform I'm using, if anyone cares, is PROREALTIME. They're not paying for this. It's none of that stuff. I like some of the tools here. So I've created my own instruments, and I really just want to have a look at those. So let me just bring them up, bring them over. And so I'm going to have a look, for example, at my own dollar index. So let's just click through that and have a look. And so you can see, I'll just leave those to the right-hand side. You can see we've got a much stronger US dollar based against the other currencies in the basket that I've created. So very nice, stronger dollar index, very strong finish on the daily. And most importantly, on that monthly chart, you can see we've pulled back into the moving averages. The 50, the 20, and the 10 are all trending up. Order, angle, separation, all looking nice and bullish. We've got a confirmed swing low so far. And a nice bullish candle closing right near the high. So very, very bullish dollar candle within an existing, I was going to say within an existing uptrend. So the question now is, are we going to see that dollar continue to strengthen all the way through to the summer? And we'll have to see how that goes, but that's what it's looking like so far. If we move across to the euro dollar, this is where it starts to get really interesting. So this is the euro's performance against all the other currencies, and you can see that that's also actually had a little bit of a bullish finish. It's a breakout of a consolidation, higher lows, it's an uptrend. MACD's nice and bullish, and there's a nice little bullish candle. That weekly is generally trending up. That monthly is within a trend, so we're seeing a stronger euro as well. Move across and have a look at the pound. So the pound against these pairs, kind of similar, not as strong as the euro. Also very nice setup on that kind of daily. You can't really trade these directly, but it does give you a hint that there is some strength in the pound, despite the fact that we hear a lot that the pound isn't that strong. We can compare it. So I've got your Aussie index, which does not include euro Aussie or pound Aussie. And again, it's set up bullishly on the monthly, but no real follow through just yet. So it's not as strong as it was a couple of weeks ago. Let's look at the CAD index. So CAD, what's happening with that? And CAD index is generally kind of weakening. It's at a point now where it's potential resistance. We've got a weekly kind of correction here, so we'll see how that goes. The Canadian dollar not offering much clarity. And then we'll have a look at the yen. So yen looking very similar to that dollar index. In fact, out of all of them, I would say that we have the dollar giving extreme clarity, the yen giving extreme clarity, and the euro also providing some of that. And I expect it to strengthen across the board. But these are like no-brainers. So this week, I'm expecting follow through on that. I'm expecting the markets to largely just kind of follow through on that one as well. Okay, so now we can go across. I'll move this out the way, and we can go across and have a look at the dollar index the way it is on the platform. Same thing again, really nice and bullish, really bullish monthly candle. All of this implying that the market doesn't mean it'll succeed, but it's going to attempt to resume the trend that we have, which means we could see the dollar strengthen, we could see a lot of other currencies start to head lower. So now we're looking at the euro against the US dollar. Here you can see a bearish candle. Let's just bring up the support resistance levels. And based on what I'm seeing here, I think we can expect it to try to close lower this week. And if it doesn't, I do think straight out the gate, because of the strong finish last week, we're going to see the dollar try to push it a little bit further. But that doesn't actually mean that it's necessarily going to finish with a stronger dollar. So we could see this week where Monday, Tuesday, right out the gate, we get a stronger dollar, and then there could be a potential reversal. And I'll explain why when we look at some of the other markets. Some of them are so close to support levels that what I would like to see is see them push down, touch the support level, and then finish rejecting those levels, which would change not necessarily change the monthly candle too much, but certainly change the weekly candle. So I'm expecting some continuation, essentially, is what I'm looking for here. Sterling as well, I was looking for that as a bullish setup, which it kind of broke higher, but now it's starting to look more and more bearish. We're range bound on that weekly. That monthly is set up. It's a really good area for it to test to move lower. So excuse that noise. That was my extension cord, which I've perched on a ledge, which has obviously come off the ledge. The Australian dollar, US dollar, this is what happens when you try to clear the office, clean it up a little bit. It just gets it. These things happen. Look at that weaker Australian dollar, very closing right near the lows. So that implies again that the Australian dollar is weak and the dollar is quite strong, but it also tells me there could be some good trading opportunities on those Aussie pairs, Euro Aussie, Pound Aussie as well as the Australian dollar against US dollar. Let's look at dollar yen. I'm skipping Kiwi dollar for now. That's just a ridiculous setup. This is what we would normally call just a sort of a continuation candle. It's a bullish engulfing. It's also pulled back to the moving averages. So usually in this case, it would want to go on and potentially come up and test this next level. So I'm just going to go ahead and just grab this and just kind of put that up there. So that's where I'd expect that to continue on to that level. Let's move on to dollar CAD. Dollar CAD struggling in this area. As I said, we've broken that sort of general downward bearish trend. Let's get rid of that. We don't need that. And there is a level of resistance where it's at. So, and that monthly candle looks like it's a continuation to the upside. So for now, I expect that dollar CAD to continue pushing higher. It's got the support of the stronger US dollar, and the Canadian dollar itself is relatively weak. One of the things I want to mention here, just going back to that Russian ruble, there has been an increase in activity here. A lot of evidence to support. I mean, effectively, we're in the early stages of it sounds so dramatic, but we're in the early stages of World War III here. It doesn't look like it because it's so global and it's all over the different places. But it absolutely is. I can't imagine this isn't part of World War III. It's just what's referred to as a Cold War because you've got all the big powers are battling at a distance. So US is fighting a proxy war through Ukraine, thank goodness, and NATO as well, Europe as well, trying to basically nip Russia's attempts to end this war in the butt. So the reason I bring that up is because of the because of the restraints that have been put onto the Russian economy. But we can see that there is definite activity happening with regards to the exchange rate there that went dead for a while into a bit of a coma. There's now stuff happening. I don't think it's significant yet, but I just wanted to kind of comment on that. EURUSD to me is also now looking as though it wants to head back up to parity. We had a nice little test of resistance here, a bit of a double bottom there, very nice bullish candle on the weekly. That monthly though is the tricky part. So it might just want to connect with parity again, we'll see. I'm not convinced it's a high probability setup, but it looks like it wants to go back there. Gold. Okay, so that weaker dollar, I'm looking to see gold continue down to 1800. So when I said that I was expecting the early part of this week to see that dollar continue, it would be this. I was wondering if gold was going to go down to 1800 was certainly always a target, even when it was sort of back here. And I think that's going to be the case. But this was it had hit the kind of first level of defense or first line of defense and tried to turn around there, and it wasn't enough. And again, I would also like to point out the monthly, a bearish candle at this major level of resistance. I'm going to throw in another line here because I want to mark kind of where we are now. And I'm just going to tweak the color on that very quickly, just to make it a bit thicker and see. So that we could see gold now starts to ping pong between these levels. There's hints, and I posted recently on LinkedIn and Twitter and post, and I'll probably get on Spoutable soon as well, that the market's acting twitchy. There's definitely something going on, and it is very possible, although it hasn't, I've spoken about how good things are, where we've seen last year when there was fears of inflation and everything was kind of a bit scary, everything tied up with that dollar. So everything was just completely united with the dollar, and then everything has uncoupled recently, and that is still the case. But if I start to see that things are starting to tighten up again and start to revolve around the dollar, then it would be safe to assume we're going back into whatever that was that happened. And so part of that was the VIX. So if we go back to the VIX here, there was a little bit of a spike to the upside on that from the bottom, and a bit of a spike combined with the dollar gaining a bit of strength, equities heading low. It was very similar to parts of 2023, which is why I made that comment. But again, it really pays to just do it week by week by week, rather than assume that the big picture is unfolding and it's going to happen in the following week. Just deal with it on a weekly basis. Silver is looking very, very weak here, and I think it could head down towards these lows if it isn't already, and then potentially come back down towards $20. So that looks like it's well on its way. It's still in a downtrend on the monthly time frame. And so a continuation low could be the case. So honestly, this is what's quite different is this week, I'm going to put on the table that there is a very fair, reasonable possibility that we're going to see that dollar just start strengthening again. I would prefer for it not to be the case, just because I don't like seeing the market kind of completely controlled by that. But it is what it is, as the expression goes. We're just going to have to manage it as we do. And it doesn't mean we can't make money on that. It also just means equities will take a bit of a hit. So this year is not going to be, it'll be a good time to buy potentially if the market's under a lot of pressure. And it will offer opportunities for traders, but it is not going to be great for investors looking for growth this year. It's going to be a good opportunity to buy, but you're going to have to wait till 2024 to see some kind of growth, potentially. That's the implication. Copper also heading lower. There we go. You've got a downtrend on this, looking nice and bearish back down towards these lows. I expect that to continue down. Natural gas, I spoke about this being, or actually maybe not in last week's video, but to my guys, bullish divergence. I'm expecting this to turn around. So I'm looking for a double bottom or something, and I expect it to break above these highs and start to change its trend and start to climb up from there. So that's natural gas. Crude oil. Crude oil is ping-ponging around quite a bit. Looking pretty range bound. It's a mess on the monthly and going sideways weekly. So it's cautious, range bound. Brent crude will be very, very similar. Broke below this. There was another little setup here. So I'm just going to mark candles that are of interest here, finding support. Also, you can see it's just lost. So it was trying to climb higher and then just lost that. Look at this. Higher lows going into this nice bullish candles bouncing back. But then it just starts stalling up here with the highs. This high is not much higher than that, and now it's going sideways. So it actually thought it was able to climb. You can see those monthly candles looking nice and bullish, and then it just has run out of steam, and now it's stuck where it is. Wheat was in a really nice bullish formation, which I was talking about. It broke that bullish form. Oh, sorry, that's not wheat. That's, I think, cotton. We'll get to that. I was looking if this was that double bottom, triple bottom. We had a nice bullish finish. I've been on holiday. Forgive me, I've been on holiday, so I'm kind of piecing this back together. And actually, we could see I expected it to come back here, and if it was going to continue up, that it would do that in this area instead of just falling right through back down to these lows. We had that really nice bullish formation there, but it's just come back up. It's double topped after a triple bottom, range bound, and it appears to have broken right down to the downside. So at this point, I would just expect this to continue to head lower. So that means as a trader, I'd now be looking for shorting opportunities to the downside. Okay, cool. Let's move on. Coffee. Coffee still looks good. Okay, so coffee looks good. We had a nice pullback into this area. We've continued. I expect the same. So I'm now expecting a nice little pullback into this area and a nice continuation to the upside there. No bearish divergence. Looks okay there. It's coming into these old highs, so there could be some resistance it's going to deal with there, but the monthly also looks pretty good. So I'd like to see this just continue up into that area, into 250 over here, just into this area. So let's see if we can do that. Might get some bearish divergence next week and then a correction to the downside. We'll see. Sugar. Okay, which always sounds like a swear word. Okay, so sugar, I was looking for this to continue to break out to the upside. Absolute rejection. This is not going to happen now. I'm going to get rid of that, mainly because of this bearish engulfing candle and the third rejection combined with bearish divergence. This is a significant rejection of that level. When you look at the weekly candle, you see exhaustion and depletion on all of these candlesticks and a bearish close on that side. So although it is in an uptrend on the monthly, you can also see a little bit of bearish divergence there. And this is a nice trend, very nice trend. But overall, it implies we're going to see a correction down towards 19, which is at least back down towards these lows here. Okay, so looking for that to potentially target a little bit of this area. Let's kind of go down into just sort of this area and then deal with how it does that. This was the bullish setup that I spoke about, and actually we broke through this bullish line and then managed to sort of stay above these previous lows, and we finished with a strong finish. So what I'm going to do now is I'm going to remove this original one and see if we're potentially going to hold on to this. I was looking for a higher low and a break of that, but it still looks like it's not quite done just yet. So I'm just going to kind of strengthen that. I'm going to see if we're ultimately going to break out. In fact, we might, if we're going to break out, we could end up breaking out of this a lot sooner. Could you open up for me, please? And let's just expand this a little bit to the right. I could have done it manually, but let's just go through and expand that. So let's see. So far that looks like it's trying to stay intact. The good news with this is if I doubt that it's going to ultimately successfully break out from here after creating a lower low. I think this is the last attempt to test the lows before it will break out or fall apart completely. Okay. And so if you'll notice, please, that this low on the MACD is lower than most of these, even though price here is not lower than those. And that's known as hidden divergence. That's also meant to be a bullish sign. But let's see. So let's mark that bullish candle here, that bullish as a potential signal that the market is going to push on higher from here and break out. Curious to see what happens there. Okay, global indices. We are 18 minutes into this. Let's see how this goes. Move this across to the side. Also, before I forget, anyone who likes the podcast that I've done, which is on Apple now, it's on thing. I've only done the one episode. My goal was to do one episode a week, but with the show coming up and writing content, I've had too much more and having a holiday. It's delayed. But the goal is ultimately to get to a point where there's an episode a week. By the way, I apologize. I will put the link for that as well. If somebody wants it, I'll put it into the description as well. Okay, so the global indices. So one of the things I want to put this idea on the table now is that my expectation for 2023, there's a very high probability that 2023 is not going to be the same as previous years. If you just go and have a look here, we've had this period over here, which was from kind of 2018 all the way through till 2020. The market didn't do a lot, went down, up, down, up, down, up. I think we're likely to see more of that. And if we look at the bigger picture, we haven't really had a lot of that. We had a patch of it here from 2014 to the top of the market, went sideways, then it went sideways, broke out, then we had COVID, then it had a big recovery with stimulus cash, and now we've got a bit of this. I think it's fair to put on the table that we're going through a bit of a wobble here as well, like heart palpitations or whatever you want to call it, arrhythmia. The market is battling a little bit and it is not stabilizing yet. So it's safer for me as a trader to assume that it's going to stay unstable than to keep expecting it to be stable and then it isn't. Rather just pretend that it's, allow for it to be unstable now, and then when it stabilizes, I'll be like, okay, great, I'll spot it. But that is something that I'm expecting. So that means that I would expect the markets with this failure over here. You can see that indecision, failure at this level, and a break and a close lower. That usually means the implication is momentum to the downside. But what it doesn't necessarily mean is that we're in for a market to go all the way down here. We could be, but it doesn't mean it. So anyone who's seeing this is now listening to the very bearish news going, that's it, the sky's gonna fall, the market's gonna crash all the way down here. I'm gonna short everything, and then they lose their shirt because the market ends up going back up. It's much, much safer to just play it, as I said, play it as it lies week by week, see how the market goes. The implication here is that we're gonna see a bit more of a bearish move lower. We are sort of kind of just on that 50-period moving average. We become more bearish below it than where we are now, so I want to see what the follow through on that is. Okay, but so far it's not looking super bullish, but it also doesn't mean that we're necessarily at the beginning of the next big crash. Okay, we could be, but it's ridiculous to assume that at this time. And it's not necessarily going to happen that quickly. We'll see. S&P. Okay, so S&P's got the same thing. It's got a level of resistance. Bring up these lines again. Level of resistance. It looks to me, my expectation for now is moves back down to the recent lows. That's my just plan A. So potential continuations back to the lows, treated as a range at this time. So disregarding all of these kind of continuations because the market has got back to it and not followed through. And so far we've got a bit of a bearish Nasdaq one here. And this is going to impact everyone. It's going to impact on my list. We'll go through those. Russell 2000 back into this area where it could find support. So something would have to change. In other words, Monday and Tuesday would have to be incredibly bullish to change the monthly candles. And the odds of that happening are not impossible, but they are the least out of all the odds of all the other things happening. Okay. That would be the underdog result at this time. And we deal with probabilities as opposed to kind of possibilities. FTSE. So the FTSE, I've been very proud because it's kind of gone to all-time highs. It still has a little bit of bearish divergence there at the bottom, so it's not really being followed through. That weekly looks okay, up and then down a bit, up and then indecision. It's stalling a bit. I'd like to see this come back down again to that level of resistance and find support. And so that is a possibility this week, is to see it come back down towards these lows here. The DAX, bearish candle breaking right outside of this little bit of this area, and then breaking and closing lows. So that also implies continuation back down towards those lows. The S&P has kind of dropped quite aggressively, but the weekly is what's interesting to me. It's back into these highs, so I'm just going to mark that little level there because it could turn out to be significant where it is, and does it manage to find some sort of support in this area and continuation, and then continue back up. But look at that monthly area. That monthly is not looking good. That monthly looks as though we have a struggle there, and therefore we're going to see the markets head low. So my plan A this week is to, plus the stronger dollar. So completely separately, we have a stronger dollar showing itself in other markets, plus we're seeing this in these markets. I'm going to be prepared for the markets to head lower. Nikkei is still within the range, so it doesn't change its story, but of an indecision candle here, and it's trying to turn around, but not looking super strong. Right, equities. They're going to struggle as well. We've got a really nice bullish finish here. We are still in a downtrend. We've still got lower lows and lower highs, and we're stalling a little bit here. Again, not a great sign of strength. So any close to the upside in the coming week would be the least likely thing to happen. Not impossible, but the least likely thing to happen. And obviously, over time, I always want to believe I always want to give the markets the most opportunity to prove me wrong, or to be bullish. It definitely pays to be optimistic. If you look back, pessimism has not paid historically. Okay, so Amazon, looking a little bit weak there. There could be a bigger move to the downside. Look at that bearish continuation candle. So clear downtrend. Clear downtrend, lower highs, lower lows. Look how similar this candle was here before we had to move down. Very sort of similar candle here. And in fact, that was a bigger rebound then, and it's a smaller rebound here. So yeah, we could see it move back down towards these lows here on Amazon. want to go through these a lot faster because we are 24 minutes into this video. Just back into that interesting area of resistance. Monthly candle looks a bit weak. Although I commented on these, it's looking more and more likely it's going to fall apart. Lower ARC is coming back down, creating some fresh lows here. It has, although it has tried to turn around this area, it does not look like it's going to do that. It's now looking more and more bearish. This is like we are entering, if what I'm seeing is going to be the case, we are entering into a new phase, something that we have not had since the 90s for me. We are entering into a phase of, this is, I mean, Michael Burry was saying this, Ray Dalio saying we could be entering a phase of kind of sideways market moves, of just not much growth, not much unemployment, not much growth, high inflation, kind of that's it. Been talking about that, and that could very well be the case. Look at this big correction. That also is quite heavily bearish. I would expect this to continue lower. So I'm expecting Glencore to go lower. Tesco's looks okay, but on the weekly it doesn't look good at all. Looks okay on the monthly, but not looking good here. Look at this. We've got higher highs here, but we've got bearish divergence there. I expect moves to go lower. Amex also battling a little bit here. It's overextended, stalling here, started to break, got a bit of a swing high. This could come back down into this old highs. Berkshire Hathaway. So I'm kind of presenting a sort of a worst case scenario for this week, not for further than that. I'll do it on a week by week basis, but it doesn't look great. And anything that is better than that, I would consider a win. So also it's at a level now, and I would expect that to potentially move a little bit lower. It looks okay. Berkshire Hathaway is trying to stabilize where it is at that 300 level. So looks okay with that. Coca-Cola is also stalling in this area. Look at this, like 6 weeks of just kind of just tail end of stuff, not a lot of activity happening there. And also battling with resistance. So it needs a bullish candle, which is a higher low than we had, to keep it there. So let's see if this level of resistance can hold. Little bullish candles there as well. You could just see all this stuff here, these things, see if they can hold. BP is, look, big burst out and then just stalled immediately. So that was the performance of the week before. Monthly candle looks okay. Yeah, it looks okay. So that might continue up. So this part of this feels to me very similar to 2022. And that's just stalling. So you could just see here as well with Exxon. General Motors also stalling here a bit. Look at that bearish rejection candle below that major level. Struggling. Tries to break out of the range and then is knocked back into it, which is not a great sign. Where was I there? That was General Motors, JP Morgan. Struggling. So bullish candle, and then it just gets these progressively smaller candles and doesn't really go anywhere. And that's over 4 or 5 weeks. And then comes down, closes with an indecision bullish candle, and just can't seem to get above that level. Not great signs. We've got some bullish candles here as well. Also bullish candles here, but not able to get through that level. So the markets are battling. That doesn't look good as well. Adidas is at a correction to the upside within a big move and immediately producing at the very first level of resistance is producing a bearish candle, bearish continuation candle. Meta also kind of creeping down, back down towards 153. We'll have to see how that goes. That's not a very bearish candle right now. It also doesn't look super strong. Morgan Stanley at a major level of, at least in terms of highs. I would love to see that close higher than that. It's already started a bit of a swing high on the weekly. A little bit of a potential bullish candle. Let's just see if we can manage to kind of get something from there, if we can find support in this area and push back on that. But otherwise, I expect that to drop lower. Nvidia's had a really nice recovery and it gapped up earlier this week. We still have lower highs. So even though we've got new highs in price, it just hasn't recognized that at this time. And that monthly looks good. So it's managed to break through this level and push up. So that's interesting. And it's a bullish engulfing candle on the weekly. So I'm curious, a little bit overextended, well, at least not on the moving averages, but it's a break above a major number, gapped up. It's going to try to keep going. That's different. That's going to try and keep going. Netflix already on its way back down into this area. That sort of 300 bearish candle there to the downside. I'm trying to look for lots of bullish signs. There's not a lot, but it doesn't look great. Okay, PayPal looks like that's going to head lower a bit. Spotify is going to head a little bit down towards these bits here. I want to see if we can get these. I'll just comment on a little bit of these green candles here and see if we get a nice recovery from that. But I'm not super hopeful this week. That's super bearish. Look at that break to the downside there. Bearish candle there as well. FedEx, break above there, pulls back to this. I need to see more of a bullish sign. It's a downtrend on the monthly. So you've got lower highs, lower lows. You've got an uptrend on the weekly. You've got this conflict. So not looking great. Again, it would just, all we've seen in the last 4 or 5 months is seeing a retracement on the monthly to the upside, which looked like a new uptrend, which actually in most, like 90% of previous cases in the past, that would be the case, but not necessarily this time around. Stalling right here. So I marked that level last week. We're stalling. This is an area of resistance. What are we on? Tesla. And this is a downtrend. So look, if you saw this as a head and shoulders, I spoke about this a while back, but if you saw that as a head and shoulders, then this would be the neckline. We would have broken through that. We would have headed down potentially a little bit further. It could be breaking through the trend line, coming back up to test it from this side, and then continuing down. And again, normally, historically, that would have been a buying opportunity at the lows. But if we're not through this yet, and 2023 is going to be a bit of sideways motion, we're going to see this turn where it is and continue down. Vanguard, battling in this area, also struggling, and also in that monthly, not a strong finish as well. So there's some stuff going on. The market's going through some stuff, clearly. Look at this. Look at 10-year T-note breaking through these lows. Very bearish engulfing candle there. Eurobund also not looking super strong. We're going to get a bit of also bullish divergence there, but it is struggling. Okay, which means naturally cryptos are going to take a hit as well if that's going to be the case. If we look here, bit of a bearish candle there against that 50-period moving average. Was so nice and bullish. I really would like to see this stuff change, but it's not looking great. So this week, if we break obviously below these lows here, we're going to see a bigger correction to the downside. We have bearish divergence, not signs of a lot of health there. Okay, same thing again for Ethereum. It's going to move lower. Cardano, Binance, it's all trying to find support in this area. It's desperately trying to find some support in this area. But doesn't look... those concerns that we're going to, it's still technically kind of low highs, low lows. Will it even be able to possibly even just kind of break across that kind of line in the sand or head lower? Break through that would see it going lower. Digital world, yeah, look, digital world as well just keeps dropping down and down and down, and IG as well looks good. Some of these look nice and bullish. Okay, so just to sum up, we're going to do it there. 32 minutes, not ridiculous. Yes. The markets are absolutely not the same as they have been in many, many years. I want to include the possibility that the indices, which tend to, for example, usually go up historically, or have a big correction, I want to include the possibility here that we're going to see range-like behavior, which implies extra caution. And if this is going to be the case, which will really become more and more obvious over the next few months, it means that this is going to be potentially a good time to be a buyer if you can buy at the lows. But understand that it's going to be a while before we get out of this. But when we do, the markets will grow. So it could also just be simple fundamentals that we're not getting that inflation coming back down in line. And therefore, until that happens, the Fed's going to keep tightening and we're still going to see that stronger dollar. So I'm going to put it on the table now that we're seeing that dollar continue to strengthen. It might not go all the way back up to where it was, and it might not go beyond that, but it looks like at least for the foreseeable future, that's going to be the case, which means equities are going to take a bit of a hit. Some of the commodities are going to take a bit of a hit. The markets are going to range a bit. So you're going to hear a lot more about people's portfolios not doing so well or people losing money because the markets are going to be more range bound, which is going to be good for traders who understand that shorter term opportunities means taking profit sooner. Maybe not 3-to-1s or 4-to-1s, maybe 2-to-1s, different approaches. Taking profits, partial profits, updating stop losses, definitely doing that. I'll leave you with that. I'd love to hear your feedback on this. Any comments, please, welcome, put it into the comment section. Usually I check the comment section once or twice every other day, so I don't always check it all the time, real time. And so if you find that your comment hasn't updated, it's usually just a lag before I kind of go back to it. That's it, ladies and gents. Look after yourselves, trade sensibly, have a plan, and thank you very much. I'll see you in next week's video.